Okay, welcome back everyone to a brand new episode of the Crypto Muay Thai Podcast. I'm very excited to welcome my special guest today, Tyler Ward. He's the founder of BarnBridge. So for those of you who are involved in the Ethereum space, and particularly DeFi, I'm sure you'll have heard of him and his new protocol, given it has a substantial amount of value. It's locked up within the first 48 hours, and obviously it's more than that now. But without further ado, Tyler, how are you doing today?
I'm good. Like I was just saying, I mean, the elections are crazy in America, but I mean, I think that this even just goes to show that we probably should have more stuff verified on chain. Like we're dealing with it on the banking side, but hopefully someone else in the industry can make this a little more secure for everybody.
It's funny that you bring that up because my father-in-law, my stepfather-in-law, he asked me, I don't know, like years ago, whenever he found out that I was into blockchain and digital assets, about this same exact thing because of the 2016 elections. And I was like, yeah, if they put everything on blockchain, this would take 2 seconds and it would be immutable and 100% verifiable. He's like, so why don't they just do that? It's like, for all the reasons I just said, like you can't fuck with it. You know, there can't be this sort of this spectacle and frenzy. But yeah, hopefully, this space will continue to kind of innovate from the ground up and eventually trickle over into that space or into that particular area.
Yeah, I think there's a lot of people that have vested interest in blockchain not being like involved in voting. Particularly that, like, whether you like what's going on or not, it's definitely been like showtime. Like, this is show business as much as it is like an election, and that's kind of what America is. But like, I mean, let's be honest, like the rest of the country would probably prefer that we had a more, I mean, it's better for democracy. Like,
yeah,
side of the vote.
100%. I think the rest of the world would prefer if we had a straightforward, electoral process, given we continue to to sort of decline in the worldview, which is very unfortunate because personally, I love to travel. And this is the first time that, having a U.S. passport is about as good as, wiping your ass with it, which is incredibly unfortunate. But we can go on and on about this. Hopefully, whenever this airs, we'll have a president.
Yeah.
But with that, tell me a little bit about your background. The quick 20,000 foot overview, and then naturally evolve into how you found your way into the wild world of digital assets, and then ultimately founding BarnBridge.
Yeah. So I've worked in digital assets for like late 2016. Is probably when I got like really interested in it. Like I had bought some Bitcoin before just because I knew some smart developers that were like, this is going to change the world. But I had like started my career. I mean, I have a finance degree. I started my career in investment banking as a fixed income trader. And like, I don't know if I really understood the point of Bitcoin, like not being backed by anything other than scarcity. I understand it better now. But I understood Ethereum like very quickly, like what the value was. And the way I describe it to people is that you can write if-then statements into money. So like where like Bitcoin is like peer-to-peer transactions between one person to another without needing an intermediary. Well, like Ethereum allows you to send peer-to-peer transactions to another person with if-then statements built into it. So like you can go into a business arrangement and you don't actually have to trust the counterparty. You don't even need an intermediary. You just need to read the code and know that the contract's going to execute the way that that you would like. And like back then, I mean, I think a lot of people, especially in like 2017, had like moon boy expectations of what Ethereum could do, and then like some cats broke the network. But like I think that like DeFi was a no-brainer. Like the concept of being able to put loans on chain and put bonds on chain and be able to like trustlessly deal with like, I mean, there's a lot of paperwork that goes into lending money all the way down to like fixed income through Wall Street to like Fannie Mae, buying debt off of like Countrywide, like all, and then like that getting repackaged, like every single one of those things, like other than the fact that like it would be nice that they were more transparent, like on top of that, like every single one of those things I just described requires like a lot of paperwork and a lot of people writing things, and those people cost money, and that's backed into the like yield and the interest that eventually goes into the actual return to the person holding the asset. So like if you can start to cut some of this stuff out, like it's naturally going to be more efficient. The reason that all the like debt hasn't moved on chain is because there's like like there's risks, right? So like it's not equal risk, but assuming it's equal risk, like assuming that it's equal risk, but even like 5 basis points more efficient, then all the debt is going to move on chain long term. And that's really where like I kind of started in Ethereum. And like, I think that my background really helped me to understand like how valuable that was. But I didn't really realize like how deep I was going to go into Ethereum. I mean, like keep in mind, I was like getting paid when it was like $20 and then like went up substantially from there. So like that gave me a vested interest to pay attention. But I worked with like Consensus back then. They didn't really have that many employees. It all kind of seemed like a little bit like monopoly money to me. So like I kind of helped them start like structuring governance around some of these like white papers, like helping brand the companies, put them together, like find use cases for these ideas that were like practical and not like moon boy. And I basically did it all through my agency Proof, that just slowly grew into being one of like the larger UI, UX, like marketing, like kind of positioning. I mean, it's tough to describe what we do because other than like the UI component straightforward, but like basically people kind of paid Proof to have me and like my team try to help figure out some of these models. And because of that, I learned like a substantial amount about like all these different projects that were doing all these different things. And there were like good teams, there were bad teams. Like I worked with like everyone from Market Protocol that was trying to be synthetics before synthetics. Like I worked with Near, anybody at Consensus, like the Earn groups through Coinbase, like a lot of groups like Centrality and like Asia Pacific, like Australia, New Zealand companies. And so I'm not like an Ethereum maximalist in any capacity, just because I've gone so in depth on some of the technologies people are building. And there's like really good teams if you get out of like the scammy aspect of crypto and move towards like working with real legit teams. And like in the middle of 2019, like I was working with, you kind of had access to anybody. You could like go, nobody was really paying attention to crypto or DeFi. So like if you wanted to talk to someone, you could. And so I kind of just flew around the world in 2019, like meeting with people, kind of expanding my network, talking to people about what they were doing in crypto. And like, that's when I like came up with the framework for BarnBridge. It had a lot to do with like me realizing, like working with some of like the industry juggernauts, like what difficulties they were having and getting like TradFi involved. And it kind of like, that's where it started. And then I like wrote the white paper and it all kind of expanded from there. So it was a very like natural progression. It wasn't like I just like woke up and had an idea that I wanted to build this, or like that a lot of the DeFi projects now are like kind of forking what's already out there, like trying to make small adjustments. Like this was very much like, I knew it was a good idea. Like I remember I told my wife when I was writing it, like this could be like a massive, massive thing that could change our lives, but it was premature. The industry wasn't there yet. But it wasn't something that I think has any other story than it was just like a natural progression of my life and me realizing that this would be something cool that like I personally would want to use.
Yeah, I think some of the best stories or some of the best solutions, I'll call them, not just products, are sort of born out of that sort of process that you talked about, where it's the right person or the right team at the right time, whenever the stars sort of align. So that makes sense a lot. So whenever you're flying around talking to all these different teams. And you said you were doing this in 2019, which is interesting. So by talking to all these teams, you kind of saw the progression of where this space is ultimately going to evolve into, and that's what led you to crafting the white paper. Or did you, sort of see it how it is, but then just say like, okay, given my background, this is something that is lacking. And I think that this is potentially a nice to have, and we'll find out when, if and when there's actual demand for it. So,
That's like a nuanced question. I think I can answer it two ways. Like back then, I could just tell that DeFi was going to take off, because like when I wrote the white paper, like MakerDAO just hit 100 million in TVL. Like this was like when Bitcoin like went back up to like 13K. Like it wasn't like crypto was completely dead. Like there was some promising stuff. Like, and I went and listened to Hayden from Uniswap talk about how like an automated market maker would work. Like Uniswap had done like $3 million in trades, like not in like a month, like in total volume when I went and heard him talk. But I remember thinking in my head, like, I mean, I'm not like Nostradamus. Like the industry definitely hasn't like gone in the direction that I expected in a large capacity. Like I've definitely been right and I've been wrong. But the one thing that I did know when I was writing the white paper is like there's going to be like numerous maker DAOs that are giving yield. Someone's going to have to structure that yield. If you can basically take like an automated market maker and you can like auto execute into like not a $3 million volume pool, but like $1 billion pool, like then you can start to like structure really, really cool products. And so I started thinking about like, if I believe that you can write if then statements into money, like what types of like, what would be like really cool. And so at the time, like I go get lunch with Mark Yusko because he lives in my town, and he was trying to sell like Mark Yusko from Morgan Creek, and he was trying to sell like BTC to CalPERS, and then Andrew Keys from Dharma Capital, he was trying to sell Ethereum to State Street and some of these big institutions. And like the underlying volatility in these asset prices was really scaring them off. So I'm looking at like MakerDAO being like, well, like TradFi is definitely not going to like touch that. And so I started thinking about ways that I bet on sports a lot. And so like, if I take like a futures bet that I have to sit on for a long time, a lot of times, like I wish that I could just sell my bet, because like I may have been right that the odds were off, but I can't actually, exit the position. Right. Well, like you even see with like those why Trump in Trump things, like that is starting to get into what like proof, having like tokenized risk would actually look like. And so I wrote the white paper, and like I knew that some of these things were going to come into the space, and I was right that like Uniswap would have $1 billion pools, and I was right that there'd be numerous maker DAOs, not on the DAI side, but on like the syndicate side. Like there's Aave, there's Compound, there's MakerDAO, and they have massive amounts of volume. So like now you can basically use smart contracts to start pulling yield in it from the ecosystem, structuring that, and then like in pools, and then you split it out into new proofs of liquidity. And so like I was kind of talking about proofs of liquidity and calling them risk ramps, because like Joe Montenegro had like never even written that article or coined it. But the easiest way you can think about like tokenized risk and what you can do with it, a lot of people think of BarnBridge as just like a fixed income portal. Like we figured out a way to create fixed income in crypto, which is needed for financial planning and TradFi. But that's just like one use case, and it's the use case that we decided to go to market with because we thought the industry needed it the most right now. But like tokenized risk, conceptually, if you have a platform that you can trade in and out of risk positions of something that's going to happen, and there's an aftermarket for liquidity, I mean, you can build a like, I mean that alone justifies the reason for like something like DeFi to exist. I mean, aside from the efficiency, just the ability to be able to track all these positions, use them as collateral, restructure them, knowing what's in the structuring. Like, I mean, that's really fun, right? Like, and so I just personally wanted to use this, and the real, like, I guess bellwether like story of BarnBridge was I was just drinking whiskey one night and I shot an email to Kane from Synthetics because I had made a decent amount of money trading synthetics. Like I kind of aped into synthetics on Black Thursday at like whatever, I mean like 30 cents. And so I emailed him because like I had all these gains and I was like playing around in DeFi and like I was like putting money on Aave and then I was moving it to synthetics and I'd stake one place. And then I kind of just realized like I personally want to have BarnBridge like this idea that I had a year ago, because like in August I wanted to like risk off. Like I was like, man, all right, I made like a couple $100,000. Like I kind of want to move into synthetics to like maybe a low risk like chain link position. And like other than moving to cash, which like I didn't necessarily want to do, because then I couldn't use that cash in the same like collateral mechanisms and put them back into the money Legos. I just basically was like, I literally want to use this product right now. So if I do as like a dolphin degen, like then I know these whale groups will want to use this. And so like, yeah, I mean, I emailed Kane, I emailed a couple people like Joe Lubin, like Anthony Cesano. I told him to show it the set protocol, and Kane like emailed me back 2 days later, and it was like a very long and thought out email. I don't think that Kane completely knew at the time I was trying to build this whole tokenized risk component. I think he just thought I was trying to build the smart yield idea. But I think with everybody with BarnBridge, like the more you peel it back, you kind of go from being like, oh, this is cool, to being like, holy shit, this is cool. Like there's a lot you can do with this.
Yeah, I think even for me, I just knew it as the smart yield component of it. And quite frankly, I think that is incredibly valuable in and of itself, just because like for everything that you're talking about with the stories of Mark Yusko and Andrew Keys and all that stuff, trying to pitch it, like that's always been the traditional knock on digital assets. It's just the volatility. Like you can't get the traditional players that enter just given it doesn't fit within their parameters or within their risk appetite. So this smart yield component that you have in particular, maybe, you know, whenever things start to go gangbusters a little bit in DeFi, to where the yields can start to pump up a little bit, but you still kind of have your ass covered because you're spread across a basket, just simple diversification. So that if one blows up, you know, it's not optimal, but it's not catastrophic. Like what we've seen even with Harvest Finance, you know, most recently. So I think that in and of itself is really, really needed in this space, and also super, super cool. But now you start to layer on this other piece, and I can see your vision as to, you know, how it can gradually evolve and move forward.
Yeah, and just to clarify, like the TradFi piece I was talking about with Yusko in them, there's two products that kind of need to work in conjunction to be able to really tokenize anything. So back then I was coming back on that plane from New York where like I really dug into like MakerDAO and really dug into like Hayden's speech, because they were like JP Morgan bankers, like everybody was in the suit and I'm sitting there in like tech gear and their like eyes are glossing over listening to Hayden and I'm just like wide-eyed, like, oh my God, this could like change the world, like or at least like change DeFi. And so on the plane ride back, it was like all these things happening at one time. And so what I started thinking about is like, how does an underlying asset change in value? And so like the yield stream absolutely affects it. Like if interest rates change, then the bonds will change. Like if rent in an area goes down, then the market price of the homes will go down. Like if dividends are paid out or changed, right? Like that will change the stock price. And so like the way we were taught in finance is that like the way you value assets is the future value of cash flows, which is why I didn't really completely get Bitcoin. But having watched Bitcoin and realizing like, okay, my finance professors were wrong. Like this thing's trading somewhat like a commodity, but it's not really. I realized like that there's fluctuation in these assets that has nothing to do with the income stream coming in. And so I realized you can kind of fix both with smart contracts. If you just think of a pool being like a smart contract and everything in DeFi is pretty much pools, you can also like take an Ethereum or like a wrapped Bitcoin, and let's say like you take $100 worth of Ethereum, just to keep the math simple. I mean, but like think like billion-dollar pools in this scenario, and they get put into a pool, and then you split it out into two $50 proofs of liquidity, and you can program that smart contract to say this junior high risk pool gets 70% of the upside and downside. This senior low risk pool gets 30% of the upside and downside, so that when you put it back in to pull the capital out, it decides whose money it's going to, right? So you've essentially created a low risk entry point for ETH and a high risk entry point for ETH that in and of themselves can then be put back into the money Lego system, and like lent on Aave, used as collateral. I mean, you can even lend them on Aave and then tokenize that risk through the smart yield product, which that creates like essentially a CDO squared, but it's all trackable on chain. The thing that really screwed up CDOs was they were impossible to track, right? When you put CDOs on blockchain, they become super transparent, and like 2008 would have never happened. So we're kind of taking like mechanisms from TradFi and things that are only allowed in DeFi and smart contracts, and starting to create like almost a new type of asset and risk management structure.
That's a good point. So whenever you're talking about collateralized debt obligations, the main shitstorm whenever the economy fell apart back in 07, 08 was because you couldn't track it. And at first you think through this, it's like, whenever I look at it, it's like, does this space really need this complex debt instrument, CDOs, which is notorious, within this theater in 07, 08. But what you just mentioned there is 100% true. Everything is traceable, verifiable, and quite transparent on chain, so that something like that can't happen. Doesn't mean there can't be bad outcomes, but the sort of complexity and interconnectedness of a web to where you get this massive sort of cataclysmic downfall, it doesn't necessarily seem overly prevalent there, which again sort of makes this that much more exciting, especially, so I'm a former banker. I like to call myself a reform banker as well, particularly within debt investing. So not investment banking, but we speak a very, very similar language and have a similar background as well. So finance and economics for my undergrad, and then got my MBA in business analytics at Carnegie Mellon. So we speak a very similar language. And the world of credit, I know how expansive that is, and how a particular product like this can be quite attractive as you go up to the next levels of capital that can potentially, get brought onto chain. With that being said, you mentioned at the beginning of the call, you were not an Ethereum maximalist. So with that, how do you feel, or what is your particular, let me take a step back. So given that you're not an Ethereum maximalist, what was the decision point for at least putting this initial, first version of BarnBridge on Ethereum, simply because it's got the most liquidity attached to it in terms of the developers, capital on it, versus the other chain, which is not even close? Or was it some underlying motive or logic, again, through your conversations that you've continually had within your network?
Yeah, so when I say I'm not like an Ethereum maximalist, I'm still an Ethereum like hard believer. Like I like, if I was placing bets, like I'm betting on Ethereum. Like, so like, I just think it's destructive for the space, for the ecosystem not to accept like innovation. I think that like during the ICO bubble, there was a lot of like scams, and then people stopped taking projects seriously because everything seemed like a money grab. But like, just like other projects even like existing and innovating, like they may like create something that like could come onto Ethereum, and I think there will be like a lot of interoperability. I think there will be like regulations that allow certain chains to work like in one area, and like there may be like Chinese chains and European chains and American chains. And so like, it's just tough for me to believe in like if you extrapolate the concept of decentralization, why would we ever want everything decentralized on Ethereum? Like if one thing goes wrong, like the whole system's fucked. So like I would say like I I'm open-minded to like other chains. Like, I mean, like I work with a client called like Centrality that they're building like super cool stuff off of like substrate forks. Like I thought Near was doing an awesome job when I worked with them. So I feel like it would be like ignorant and absent-minded, like me just protecting my Ethereum bags to like not look at the other side of the equation. I think that a lot of that is like, and our ecosystem is rooted off of like self-defense and like it's almost like Noah in the Bible, like the unicorn sticks its head in the sand. Like they think that it's going to go away if they do that. But like, I think innovation is good and I think competition is good. So like, I don't have any issue with other projects creating innovative concepts. I mean, Ethereum's probably learned some things from, building that rainbow bridge with Near. And like, I know that those developers are looking at what other ecosystems are doing. So like, I mean, if they don't exist, then we're just back to centralized square one, and like the ETH whales are the gods, right, of the future. And I don't know that that's a good thing. But I mean, with that said, like to temper that, like I do think that like Ethereum is going to win DeFi, and like I think that Ethereum will most likely become the settlement layer for all like financial transactions, and that comes down to security. Like I think a lot of these DeFi protocols are undervalued. Like MakerDAO's at like $2 billion in TVL, but like $600 million valuation. Well, like that's an ARB opportunity for someone rich enough, right? Like if you can take that governance over for $1.3 billion, well, you just made 700 mil, right? And like that's how TradFi thinks. And we call that hacks, but that's not a hack. That's just an arbitrage opportunity. And so like, I think that as that starts to normalize, like even ETH's price will normalize, because you can't have like $1 trillion on a blockchain that it would be cheaper than $1 trillion to hack. And so I think once enough stuff is on Ethereum, and it would be tough for me to believe that one of these other ecosystems is going to somehow cannibalize like ETH's TVL. Then I think in that scenario, if you get enough money on Ethereum and then that causes the security value of the network to increase by ETH's price going up, and then it becomes harder and harder to hack, then you almost just create a gridlock that's like a self-fulfilling prophecy, because then banks feel comfortable going on it. Then like, I mean, nobody's going to put $100 billion bond on a $20 billion blockchain, but you start to tell a banker that thing will cost 40 trillion to hack. Like that's changing things. So when I say I'm not an Ethereum maximalist, like I just want to temper the expectation. It doesn't mean that I don't like have a massive belief in Ethereum. I just think I'm open-minded, and frankly, there are no other chains with yield. So like, if I was going to go build on Polkadot, I'm in the same position I was in with ETH a year ago. Like maybe there's a Uniswap on Polkadot that's doing $10 million in trades. Maybe there's a MakerDAO doing $100 million of TVL. But we're not talking about billions of dollars on these other platforms. And BarnBridge is almost like a layer 2 to DeFi. Like we don't loan anything out. We're restructuring risk from like other protocols around the ecosystem, and then giving you like an interface that you can trade in and out of those risk positions. So like if other platforms like start getting massive TVL and yield, well, like I'm going to integrate with them, because maybe people want to like go on a Solana or a Near or a Polkadot like DeFi. And if I don't integrate with them, then it's just going to get built over there. And it's just like limiting people to be able to trade into what they want just for the sake of maximalism, right? So like we will integrate anywhere that DeFi goes, because like that's kind of what our job is as a protocol. But right now, I mean, I'd say 90% of everything's on Ethereum, and I think we would be dumb to build anywhere else.
Yeah. No, I think you hit the nail on the head in terms of everything. Yeah, I mean, Ethereum is by far the big leader in the space, and you kind of got at to what I was sort of jockeying towards is there's going to need to be like greater enhancements specifically within the security side before you start getting these big treasure troves of capital to come on, just like you're talking about the example of $100 billion bond being issued, from whether it be a central bank or whether it be a large corporate or something like that. There needs to be a progression of security within this particular protocol for that to come to life. But like you said, just from where you were sitting, a year ago, maybe less than a year ago, versus the where Ethereum and DeFi is at now, obviously, I think if you looked and said there's no way that you'd be able to get to some of the numbers that you're talking about, then that individual will probably be diluting themselves, because it's come light years within a very short period of time. With that being said,
if I knew that they was going to accelerate the way it did, I would have because I had people that would have given me $1 million a year ago. And because that was a seed round, if I knew that, I thought we were talking years before we hit these numbers in DeFi. And then even with I keep underestimating DeFi, even though I may be one of the most bullish people about DeFi and anywhere. And even the way we structured our token distribution, we didn't design it for $400 million in TVL and a $1 billion fully diluted market cap. How in the hell was I supposed to know that this thing was going to blow up this fast? And the same thing with DeFi. If I knew that it was a year, I would have started building this a year ago. I thought it might be 5 years. So it's just tough to not Ethereum's going to continue to accelerate, even if it does get cannibalized somewhere else. It's still it's going to be where where you go to drink.
Yeah, for everything that you said, it's hard to disagree with you. So do you think that it's just going to continue on that particular path, or do you think there's at least some kind of contingencies built in that ETH 2.0 has a smooth transition?
ETH 2 is hard because there's just people that are a lot smarter than me working on, I understand finance and risk, and I'm way more technical than the average person, but there's galaxy brains working on ETH 2. And at some point, I've just got to trust that Vitalik is, he's just a lot smarter than me. And I feel I don't want to Monday morning quarterback that stuff. It obviously took way longer than it was ever expected, but I know people that have worked on ETH2, and I think DeFi probably delayed ETH2 actually. Someone would have to verify that, but we were building ETH2 scaling to fit crypto kitties, because that's how it broke the first time. Now we need scaling for a security network for hundreds of millions of dollars. So the way computer networks work is they break and then you fix them, and they break and you fix them. And it's normally the breaking and fixing, it's the application layer pushes the protocol layer forward, right? And we've really only had that twice with Ethereum. So in some ways, I think the work they've been doing, it's tough because it's going to break in some other way. So I don't know if ETH2 is ever going to be fixed. If people are just expecting that this is going to fix any and all needs, I think they need to kind of temper their expectations, because TradFi hasn't even come in yet, right? And there's a lot of stuff that blockchain needs other than ETH2. It needed risk management, which hopefully we can help with and become a primitive for that. But it also needs a lot better insurance components, not just an on-chain nexus, but even an off-chain. TradFi is going to need some these smart contract audits, right? There's only so many Trail of Bits and Open Zeppelins, and I emailed Trail of Bits when that amount in the TVL went up so much, just because we did audits, we did internal audits, we did external audits, we talked to people in the ecosystem. But at one point when it was 500 mil, I was all right, well, I should just pay extra people to do audits. They said they were booked out till late 2021, right? So there needs to be some better on-chain auditing system. I think it would be cool if someone like Gitcoin could create I talked about it the other day, I don't know where, but I was saying someone should make an audit DAO that all the big DeFi players put $10 million into, and then you submit code to get audited, And if like it doesn't get hacked, then there's like the auditor takes a slice and then the treasury takes a slice. If it does get hacked, then that $100 million exists. So like the people in the DAO are like incentivized to like, they have skin in the game. There's collateral for the other side. Like, I mean, I'm not going to build that. I'm building BarnBridge, but like, I do think that we need better insurance. There's no FDIC. I mean, even at Coinbase, like much less like on Aave, right? Like, so that's going to prevent like major players from moving in the space. And it's not even FDIC. Like you can't even get real insurance contracts written, right? So like that there needs to be more progression in DeFi before major players start taking risks, like a major insurance player, like a major bank writing debt on chain, like so. And then it'll that will be when people talk about that gradually, then suddenly, like once you start getting a couple, it's gonna come fast, but it hasn't even really started. Like DeFi is kind of a circle jerk amongst like all of us lending money to each other and giving money to one trader. Like it's like 10,000 people around the world. Like I see those MetaMask numbers, but like I have like 100 wallets too. Like I don't know how much I believe them. Like I think the DeFi ecosystem's like 10, 20,000 people max that are actually using it, not that have like tinkered with it.
True, and that sort of flows into the TVL numbers as well. So you figure if there's 20,000 people in there, and it's predicated upon majority of that value being locked into whether it's Ethereum or whatever particular basket or bag that they're holding, you know, if shit hits the fan within the market in general, then you're going to see those TVL numbers just gradually just shrink. And it's not because people are ringing the register and looking to get out. It's just because of general fluctuations of the market until you gradually expand that pie to where you've got more people coming in with actual, you know, dry powder, so to speak, and bringing it in.
Honestly, though, that's when it's gonna break. Like it's gonna, like I hear people talk about this, but like people are gonna get liquidated if like prices like plummet in the next like 6 months, but they're not gonna get like the lenders won't get full on wreck because everything is over collateralized, which means like if I have $1 million of ETH, I can get like 700K of USDC. But like I could go to any bank in the world with $1 million and get them to lend me 800K on it, right? Like that. So the financial like domino system that blew up was because of over collateralization inside of these CDOs. It wasn't even the CDOs themselves. If everything in those CDLs was 70% of the collateral that backed it, there also wouldn't have been a crisis. So like we honestly, I guess what I'm saying is we need more primitives to come on chain for a financial crisis other than speculative price drops to even really wreck DeFi. I mean, like synthetics is like 600% collateralization ratio. Like Deutsche Bank's like 1 to 33. So just do the math the other way, right? Like negative 33,000%. So like I think TradFi, we're hoping that they come on board because like we want them to get involved in this space and see what we're building. And I think we naturally know that's going to cause prices to go up, but people should understand that when TradFi comes in, they're going to fuck this shit up. Like they're going to mess things up. They're going to think what a lot of people call hacking is called arbitrage, and it's completely legal. They're going to get over collateralization off chain. Like there's going to be insurance contracts that don't pay out. Like we're basically going to be relying on all these centralized entities to somehow make us better. And in some ways they will, and in some ways they won't. But like, I mean, all the DeFi could blow up right now. And like, I don't know, a couple people lost a couple $1 million. Like when TradFi comes in, it becomes a big deal. Like we have to architect systems that are much more secure.
Got you. So you brought up a couple things there. So with that, do we think that, you know, this is something that we want to invite in the near term, or do we just want to continue to sort of just build it from the ground up, very bootstrap, like essentially this entire DeFi space has going? Because I mean, from where I sit, it's doing just fine, you know, by itself. Obviously, like you said before, we know exactly why we want, traditional finance to be in here is because they've got big ticket items, a lot of money, and we know inherently that's going to boost prices a lot. But for all the things you kind of mentioned, like, is the juice worth the squeeze in kind of like the short term, or does it gradually continue with the grassroots efforts? And then whenever it's time for shine, kind of like Bitcoin, now it seems like 2020, 12 years later, is Bitcoin's coming of age moment to where it can handle more and more of these traditional larger players entering and taking up a slice of its pie.
I mean, Bitcoin's a completely different scenario there, just because Bitcoin doesn't become any less secure by more people owning it. Like, DeFi actually might become more like less secure by more people being involved. Like, we can't even like get like fellow degens to read audit contracts to know a harvest wasn't safe. So like the TradFi is definitely looking at that, being like, yeah, I mean, like, all they would need to see is harvest to be like, I'm not putting money in any of these places. So like, I don't think that it's bad that TradFi comes in. Like, if we're gonna bank the unbanked, like just bank the world, bank everybody. Like, it just unbank the whole world, right? Like, it doesn't. I think that it'll make the system more efficient. And I think like it would be better for all of us if like some of these traditional institutions would use it, but like it's gonna be a mess for like, it's not gonna be like a clean transition. And like, I just feel like that just based on once one of them does it, then another one does. Like, I mean, maybe we can start with these like lower level. Like, I would like to see just more RIAs getting involved in DeFi. Like, I mean, not like we're still selling them on Ethereum and Bitcoin, right? Like, so like maybe just taking a position on a DeFi protocol, like to try it out, like as a $100 million money manager, right? Like, I don't know if we need BlackRock, but like, I mean, it's tough because it's already grown so fast. And like, I don't know if it's a logical fallacy to track that growth and just assume it's going to continue and accelerate. But if it does, like I mean, it's kind of like BarnBridge. Like, it's not really in my control and it's not really my decision. I have to deal with the hands I was given. Like, would I have liked to have an extra 2 months to build into the hype that we have now? Like, absolutely. Like, but I mean, it is what it is. Like, I mean, it's fourth and inches and I'm getting the ball. Like, I can't pitch out, right? Like, so you got to do what you got to do. So if it comes to Ethereum, I think, yeah, some stuff's going to break and I think we'll be better in the long run. But I don't know if we're going to be able to stop it once it starts. I mean, they're trustless, permissionless protocols. Once they learn how to use them, nobody can stop them. They don't need our permission. They could go use Aave right now if they wanted to. JP Morgan could open up a position. There's nothing Stani could do to stop them.
Got you. No, I think that makes sense. And it's a interesting, obviously we're not going to come to any solutions today, but it's an interesting sort of thought circle to sort of go around and to think about what are the implications as this space kind of grows and evolve. But kind of coming back to where we started, what are, like, who do you view BarnBridge's product initial like target users that you're looking at? Because you talked about you wish you had this for yourself as a personal trader. Is it looking for quote unquote people within the space that are relatively sophisticated individuals, or is it some of the larger players, dolphins / quasi whales that are here and occasionally need to take a more risk adjusted approach in times like this, whenever we're having a little bit of a cool off in DeFi, if they don't want to reallocate or shift over to an asset that's doing well, albeit Bitcoin this particular time?
I mean, I think that it's both sides. I mean, I actually thought that it was going to be primarily funds, and like, you need liquidity on the platform because like you can't structure a lot with like small pools. Like the fees, like the more work that a smart contract does, the more inefficient it becomes. So like, I think that I underestimated what you would call in traditional finance is retail. I mean, there is no retail with BarnBridge because we distributed the tokens kind of as a reward for proof of liquidity. So like nobody bought them. So like, but like retail is just like a retail investor, like the average degen. I'm not sure. I shouldn't say this, but look, through BarnBridge, I've had to meet with like top VCs in this space, and they do not know as much as like the average degen. There are some select funds within crypto that get it and that they are using DeFi protocols, and like they're the ones that are winning DeFi. But so it might be degens that use this more at first, and then as they get better, like they'll start funds of their own. And I do think there's probably 8 funds in the space that will use it. And then I think big players like a DRW or a Jump, like those massive institutional liquidity providers, like I think they will find ways that they'll want to use it. And then I think like a Coinbase or a Binance could use it just as a low risk entry point. Like you can almost just start someone at 10% ETH, teach them a little bit, move them to 20, move them to 30, move them to 40. So like you could have Kexes integrating with these products to essentially like onboard users to full crypto ownership through education. Like Binance could do it, like the trading platforms that could integrate with it. So like it really is going to come down to like integrations. Like at this point, BarnBridge like is like bigger than me. So like I'm not gonna like, we have major protocols seeing if like we'll integrate the cross-platform stuff sooner than like I'm like we haven't even built it on Ethereum yet. Just give me a second. But like I think that like I overestimated how sophisticated funds were, and I underestimated how sophisticated retail is. Like out of those 10,000 or 20,000 hypothetical DeFi users, there's 1,000 that would use BarnBridge a lot. There's probably 8 funds, and then there's probably 50 like existing like in the ecosystem institutions. And if we do that, we'll be like one of the large. I mean, if we can just execute that, we'll be by far one of the biggest like DeFi platforms. But like the TradFi component is what makes BarnBridge a game changer. Like if you can start, this is something that you could go to JP Morgan and tell them like this asset represents this risk. The price is verified on this oracle. This is the pool. Like here's the audit. Like here's the insurance contract that manages that pool. Like I think that starts to create a scenario where they would go in. So like, the concept of tokenized risk, I think everyone will find a use case for. I think we have to build for institutions now, but I do think like the degens will absolutely I would use it. So I feel like any degen with $100,000 like stack, there's degens with $20 million stacks like that. I think they'll use BarnBridge.
Yeah, it makes sense. Kind of how you've laid it out about yourself and just in general throughout this conversation. That makes sense as a the initial kind of beachhead to where BarnBridge would go out. And I kind of like how you phrased it. It makes me think as like BarnBridge, almost like the gateway drug, for getting new people, new money into this particular space. It's like, okay, we'll just start them out with 5% of Ethereum, and then 10%, and then gradually, as they're kind of in the space, they'll understand and become more and more comfortable, and maybe they can gradually expand out on the risk curve a little bit.
I think, yeah, and they won't necessarily know that it's BarnBridge doing that. It's almost like Ren BTC makes like BTC way more interoperable, and like I don't know, like it might just be called like JUN ETH, right? Like Junior ETH. They're like, we have to work on the syntax of what like Smart Alpha is going to look like. But I think like, I shouldn't say 100K, by the way. Like I don't want someone to listen to this and be like, oh, you got to be like 100K whale to use BarnBridge. Like I think there's going to be gas fees. So like, I think anything in DeFi, you need at least like a 5K stack to like really make it useful, or you get eaten in fees. And I think some of the smaller players don't realize that. So like, BarnBridge is going to need like better, like optimistic rollups. Like, we need ETH2 to come out So like, I mean, long term, like I think hopefully someone with $50 can use BarnBridge to like manage risk. But I mean, it is what it is in DeFi right now. But yeah, I just want to clarify what I said earlier. If someone doesn't listen and they're like, oh, cool, I'm never going to use this.
Yeah, it's
like I think if you've got like $2,000, $5,000, like you'll find use for BarnBridge. I think if you got $20, like I mean, like $2 gas fee on $20, that means your entry and exit, you're already at 4% loss on that trade. Like we're not going to be at these yield levels forever. So, I mean, yeah, hopefully that answers the question.
No. It totally does. And I mean, I think just like you were talking about, yeah, it's a really super interesting premise. And are you having any conversations, like initial kind of like high level strategy conversations with any banks? Like, obviously I know that you guys are at the early stages of the tech development, but are you just kind of like putting the bug in their ear saying like, hey, in its grand vision, whether that's version 1.0, 1.5, or even 2.0, it's going to have the capability to be an absolute game changer, and walk them through all the particular reasons why, as you sort of articulated earlier in the podcast?
Yeah, I would say in that capacity that my like default to the community up to this point is like, I'm just a very transparent person, and like sometimes to a fault. Like I'm sure the lawyers are going to go through our Discord for BarnBridge one day and be like, why did Tyler say all this stuff? But like with that said, as like an asterisk is like, I don't want to like name drop things that haven't happened. And I'm also like in some scenarios under NDA for things that are in development. So like I've got to kind of act like someone that's running a protocol with like $400 million staked on it. Like, so I will say that I have been extremely surprised with the people that I have gotten access to, both on the TradFi side and within the crypto ecosystem so quickly through BarnBridge. But I mean, I'm not going to sit here and like name drop. Like we don't have any signed contracts, so it doesn't really make a difference for now. But I will say that like the interest is there and the interest is real. Like I'm not just saying TradFi is going to come. I do know that there's people looking at this.
That's awesome. I mean, at the end of the day, I would never want you to put yourself or the protocol at risk. I mean, you could tell me to go fuck myself for all I care.
I just mean for anybody.
Yeah, no worries. But I mean, at the end of the day, that's awesome news to hear. Like even sort of talking from a 20,000 foot overview, that there appears to be proof in the pudding that there's tons of interest, not just within our particular small bubble that continues to grow and expand, but also within the greater financial ecosystem as well. So we're running up towards the end of time. I want to make sure I'm respectful of your time, given you're such a busy man now. Is there anything that you wanted to talk about, or just kind of, again, put the bug in people's ear that we didn't get a chance to discuss so far on the call?
Just like if you watch this and you get super pumped about BarnBridge, or you see like the super high interest rates in Pool 2, I wrote an article for the community. I'm not allowed to talk about like price, so I can't tell you whether I think it's going to go up or go down. Like that's like price manipulation. I could go to jail. But I just want the community to be like super acutely aware of how dangerous Pool 2 can be if you don't know what you're doing. Like, so I wrote an article, like if you like listen to this and you're pumped and you want to yield farm, like I think Pool 1 is relatively safe. It's a stable coin pool. You can like, but Pool 2 is not safe. Like you can lose a lot of money there if you don't know what you're doing. So like go to our Medium and read an article about it. Like most people that start DeFi protocols aren't like sounding the alarm for how you could lose money or whatever. And I don't want to be the reason someone gets wrecked. I mean, BarnBridge is a risk protocol, so even on the actual product, like there's a winner and loser on every side of a trade. So like it's a tool, that's how finance works. But you do need to like understand what you're doing when you play with these DeFi protocols. And I wrote a pretty in-depth like piece about it. So if you're going to do this, definitely like look into it and understand where we where we created it to be very low risk and where we created it not to be.
That's awesome, man. You know, for someone where I think we view the world, it's probably our finance backgrounds from a very similar perspective. And also probably, I don't know, you're from Tampa, I'm from Pittsburgh, but I get the very sense that it's a very sort of bullshit and just kind of say what, you know, you want to say and just be open and honest. And that's kind of how I roll too. So I think that's great. And for all the listeners or viewers out there, please check that out before you do that, because just like you said, these things are great. I'm super bullish on BarnBridge, obviously, or else I wouldn't have had Tyler on. But you know, these are still new things, and just like you said, there's tons of inherent risks that you need to just make sure that are appropriate for your particular situation. But at the end of the day, we're not giving financial advice. We're just talking in general, broad strokes. But Tyler, I had a blast. I can't wait to have you back on the podcast, you know, 3 months, 4 months down the road, whenever you've actually had a chance to execute on some of the stuff that you're building, and then gradually see where that takes you even further. Maybe it'll be $1 billion in TVL next time, and you've got deliverable products, and you'll be able to talk about some of the different partnerships and shit like that you're, you know, kind of alluding to, which I think will be pretty cool. But I really appreciate, again, you taking time, you know, out of your evening to jump on a call and sort of shoot the shit.
Yeah, for sure. I mean, it's fun. I always want to talk to people about BarnBridge, and it's good.
Awesome. Thank you, everyone. I will see you next time.